You know what this umbrella's worth?
Nothing.
Whatever.
Worth nothing.
It could be a lot.
It could be a lot. It
It's
could
worth
be
whatever
nothing.
somebody wants to pay for it.
It's worth what somebody wants to pay for. That's absolutely right.
Depends how hard it's raining.
It depends how hard it's raining. That's right. This umbrella
When you're in sales.
was selling for $5 last week. And last week I was in a meeting. AJ, you're here. I was with a meeting with Paul. And when I was done with Paul, I was walking out into the rain, going right into the subway. And Paul said, "No umbrellas?" "No, I'm going right to the subway. I'm going right back to my car." And then I decided to go to another meeting where I met Lori last week. And out of Penn Station, I had to walk about 5 blocks. And coming out of Penn Station, it was pouring. But at the top of the escalator, there was somebody selling umbrellas. What was it worth to me at that point? Right? It's worth a lot more at that point, walking the 5 blocks without getting wet. And I told the story last week. And he said, $5 for the umbrella. And I pulled $10 out of my pocket. I said, "Merry Christmas, you just made my night." And I gave him $10 for the umbrella. And I thought about what Warren Buffett says. The price is what you pay, value is what you get. Was it worth the $10? It was worth more than $10 to me. So no one can touch this umbrella tonight. Unless you got $20 in your pocket. And double my money. So value is subjective, is the point of this. Value is subjective. And depending on where we are in time, and depending on what we're trying to accomplish, we may or may not be paying premiums on things that we find of value. I paid a premium, but it was worth it to me, so I didn't have to show up to last week's meeting wet, looking like a slob. So value. I want to talk to you a little about, some of you, I know you, some of you is the first time you've met me 5 minutes ago, want to know what this is all about, and some of you have come to learn about real estate. What you're not going to learn here tonight is you're not going to learn how to buy something from me. You're not going to learn how to get a booklet and a workbook on how to become a millionaire quickly in real estate. That's not what this is. I'm not selling you on anything. I'm not an academic that I'm going to teach you economics on real estate. I'm not an advisor to tell you how to make money in real estate. I'm an ordinary guy, first generation Italian in this country. My parents have a high school education and taught me how to work hard, and I learned real estate when I was about 7 years old, coming home from soccer games on Saturdays, and my father used to make me go cut the grass in my cleats and my shin guards. While everybody else was playing, I used to cut the grass in his multifamily properties. With a high school education, worked hard, put us through school, and became self-made millionaires. That's how I learned. Okay, so I'm not here to teach anybody anything about real estate at all. There are people out there teaching. There's some doing classes tonight. Those are all gimmicks. That's not what this is tonight. Tonight I want to talk to you a little bit about something a little bit different. The paper side of the business. Mortgages, deeds of trust, and trading paper. It's going to be a little bit different. But before we get there, why would you even bother listening to me? I want to tell you a little bit about value from my experience and what I've gone through and why the approach that we take we think is a little bit different in how we deal in our market today. My wife Amy's here tonight, has been a great supporter of our business. Her brother Eric's here as well, great supporter of our business, and he's seen where we've come from and the path that I've taken. But I just want to go back that I've been doing this business not since, obviously, since I was 7 years old, learning property management and the value of hard work. But I've come through going to school to get a computer science degree. And from my computer science degree, it eventually took me into doing networks. I was one of the first Microsoft certified systems engineers, Cisco certified engineer, and I went eventually to do a virtual network for a real estate company in Brooklyn and Staten Island, and then got back into my real estate investing over 20 years ago. From there, got into the mortgage banking business, eventually had my own bank, was writing mortgages, lending money, had a big rental portfolio as well. And yes, I got caught up in the 2008 crash as well. That's the first time I had seen a market crash as hard as it did, and I was not prepared. To the point where 2 days before we actually got married, I filed for a bankruptcy for a Chapter 13. Not because I wasn't going to pay anybody back, but we were about to go on our honeymoon and I wanted my affairs to get settled. We went into a Chapter 13, and I told my attorney right there and then that I want to pay back everybody that's owed money, and I want to pay them back what's rightfully due. but we're going to find out what's rightfully due, and we're going to challenge some of these proofs of claim, and we did. And knowing what I knew, at that point in time, I actually, once everything collapsed, I actually went to law school to become a paralegal because I was very well versed in the mortgage-backed securities and all the fraud that had been going on. I went to paralegal school, and I started learning more about bankruptcy, more about civil procedure, legal handling, and legal writing, and I started training attorneys on mortgage-backed securities and how illegal foreclosures are going on, to the point where I built up a little bit of a practice training attorneys, and I became accredited in 11 states to give continuing legal education on mortgage-backed securities and how to fight illegal foreclosures. Because it was going on in my personal life, I knew how difficult it was to go through that, and I knew that other people were having a hardship as well. What I didn't realize then is they can't make any money doing that. So what I realized then as well is that this goes back to all the way back to the days when I was in grammar school. It's just in my personality. I was always the guy in the schoolyard beating up the bully that was beating up on the weak guy. I was always getting into those fights, but from a defensive posture for those that couldn't defend themselves. And here it is that I was doing it again in my career, helping people who got into bad loans, maybe understood or maybe did not understand what they were getting into, but they were losing their houses and the banks were taking advantage of them in a predatory way, and I came from a defensive posture trying to fight them. But I just got married, and we just started having a kid, and that doesn't help with paying bills. So, going through the bankruptcy, using what I've learned, I got my attorney, and we fought two of my banks inside of my bankruptcy. And lo and behold, after all is said and done over the course of 3 years, the banks ended up paying me and settling my cases. They paid all my creditors back for me, paid my attorney, and I walked away with a check, profiting from it. When I put my fund together now, we're going to talk about in a second, and I'm talking to my securities attorney about putting my PPM together, I told him the story. Before I told him the story, I said, we have to put in this, word this correctly. I did go into a chapter 13, but I came out profiting. He said, you can't say that, because you're making the insinuation that you went in at a certain net worth and you came out at a higher net worth. And I said, that's exactly right. He said, it doesn't happen. And I told him the story over the course of 45 minutes, and I heard his mouth drop over the phone. And he said, wow, I've never heard of such a thing. I'm going to write it exactly the way you said. And I said, and here's the case. You can disclose to everybody that I went in, we paid everybody we had to pay, and not a dime came from me. It came from JP Morgan Chase, and it came from Ocwen. They paid everybody off, including my attorneys, and I walked away with a check. Okay? That's all documented. So what I found out at that point was, there's got to be a better way to do this. I still want to go out. I still want to make it better for people out there that can't help themselves. I want to make money doing it. Training the attorneys, no offense to the attorneys in the room, you can't teach them anything. It's like herding cats. So I decided, here's what we're going to do. Let's go and buy these loans ourselves, take the banks out of the equation, become the bank, and let's go and do what we need to do by becoming the bank. And that's what we did. So how do we do that? So now we need to go raise a whole bunch of money. So we started a fund. So for the course of 2 years in 2012, for the course of 2 years, I shopped around as to who we wanted to come on our team to build our fund. In 2014, we launched our first fund, the Distressed Real Estate and Mortgage Fund in 2014. We started with our own money, friends and family, and we started building our team. Tonight I have most of our team here. Brad Borkes is here, who is my part of our advisory team. Tibor Demolki is right here. Any of the rehabs we do is our project manager. Lou Sukpal is coming on as our CFO now. Who else do we have? John and Marty, part of our marketing, to help to get us here as well tonight. Who else do we have here tonight, part of the team? Scott's here. There he is. Scott Piper is one of our attorneys on our deals as well. And these are the people that have come along and helped in our vision and our journey to help in our success. So the value in my journey comes in the experience that we bring to the marketplace here. That's what I want to talk about on value. So tonight's topic then is trading paper. We want to talk a little bit about not only distressed properties, but the paper side of it as well. And why do we like the paper side? I'll give you an example. If you own a multi-family property, Scott, we'll role play a little bit. If you own, let's say, a 4-unit, we'll call it, and you're making $1,000 a month on each unit, you're making $4,000 a month, you own the property, I'm the bank, I'm the mortgagee. You have to pay the bank every month. I'm one of your expenses. You pay me $3,000 a month. If 2 of the units go vacant, where's the other money coming from? I'm still getting my $3,000. The rest of the money's going to come out of your pocket. If there's a new roof that's got to go on the property, it comes out of your end. If in the end you don't pay me, what do?
We're closed.
I take the property. I'll take the property back and I'll find Brent, who is a better property manager, and I'll partner up with him. Brent, you take it and I'll finance you as well. So it becomes a relationship. So who's got the better part of the relationship? The money guy. The bank always does. So you want to you want to control without owning. And the way you do that is through the paper, through mortgages, by owning paper. You control the real estate without owning any of it. All the expenses, all the downside is on his side. So where we come from, we own a little bit of both. Because there is advantages to owning property. There's advantages to owning paper. It's a lot easier to own paper, in my opinion. So we do both. But tonight we want to talk a little bit about the paper side of the business. Why do we think it's a good time to do that in this time in this economy? How many people here think the economy is going to go up? How many people think there's like a crash that's going to be coming at some point? We don't know when, right?
Eventually.
Eventually? Eventually something's going to happen. We don't know when. We don't know when it's going to happen. But real estate, as a hard asset, has always been a good investment to preserve wealth, to preserve capital, and to help wealth to grow. The problem today is we're still feeling some of the after effects of 2008. There's still a lot of that shadow inventory out there. The number one, the banks don't want to deal with. And number two, it's very inefficient, their systems they have in trying to do the workouts. That's where middle players like ourselves, coming up with private funds to buy this stuff, come into play. We're filling a vacancy out there. And we're filling a very important need in our marketplace by buying these loans from the big banks. And from the government as well. Excuse me. So our approach, unlike the banks who like to foreclose and everything, our approach is to do a workout. See, the whole business is this. The whole business is buying stuff at a discount. We buy things at pennies on the dollar. So because we buy things at pennies on the dollar, it gives us more flexibility to do a workout, to offer a discounted payoff, to try to rework with their personal financial balance sheet, to keep them in the house, to get a payment that's affordable. That's the whole key of this business, is in the discount. So by buying things at a discount, it gives us much more flexibility in that marketplace to have a real impact on people. So what's the business? The business is very simple. There's only a couple of parts of this business. Number one, finding the right deals and funding them, right? There are people in this room, there are people out there that we have had this conversation with before that go out and do this business. And one of the number one challenges they have is, where do I find the right deals? Where do I find them? People out there, there's people with money, there's people who are making payments, there are people who are not making payments. It's out there. It's a big country. A lot of people in homes. There are deals out there. How do you find them? It's relationships. It's understanding where the market is. It's understanding which banks are being pinched right now. Understanding how the banks work. Scott and I work together particularly because he's very good at bankruptcy. It's one of the places I like to go look at stuff. We talk about this. Buying stuff out of a bankruptcy. Hey, I'm familiar with that place. I was there. It's not so scary anymore. It was scary in the beginning, right? It was scary in the beginning. I remember when I told her, I don't know how we're going to get to the end of this. Somehow, remember that story? I don't know how we're going to end. We're going to end on top. I just don't know how the path is going to be. I just know where we end up is going to be okay. Now I can tell a story how it happened because it's behind me. But we didn't know then. I just knew the answer was going to be positive and we were going to make it out okay. But bankruptcy is a place we look for stuff. Other banks, relationships, other hedge funds. So we've designed our fund to be very dynamic, where we can buy the paper or the real estate. So depending on where the market is in one particular cycle, we can move nimbly through the marketplace to pick up what we think is the most valuable asset, because we're very good at finding value inside of asset. Where's the umbrella? The value, unlocking hidden value. We're very good at finding hidden value. So once we do find a deal, what's the next thing a part of this business? Well, is due diligence, underwriting. What's it worth? What's the liability attached to it? What's its enforceability? Is it really secure to your piece of real estate? What's the probability of us making money on this? Who's the homeowner behind it? The borrower, the personal guarantor behind it? Where's the real value? That's one of the most important things about this business, doing the proper due diligence. Due diligence, before you buy anything, is key. After your due diligence, well, how about maintaining the portfolio? Don't worry about my spelling. I'm a numbers guy. Maintaining the portfolio. It's the next part of the business. It's not so easy. I had a conversation with a guy, one of my borrowers yesterday, who stopped paying me 2 months ago. We spoke about this tonight. It's a similar. We don't necessarily own. We own a note on him, and we actually own a piece of the property as well. And we're funding a lawsuit behind them as well in one of these oddball cases. But he was paying us and getting involved in this, and he couldn't pay anymore. If they can't pay, they can't pay. Got disability on the job, went down to Florida. His daughter is living in the house now. We wanted the house so that at least we can get some rental income to start funding some of this as well. But the daughter's living in the house. We're working to get the daughter out. Having trouble with the marriage, and now they're trying to reconcile, and now they're trying to move down to Florida together. Great. They were going to be out by December 1. They're not out. It happens. What are you going to do? So I had a conversation with him the other day, and he was avoiding me, ducking me, but finally took my call, and I can tell the stress in his voice because he was talking to me, and he couldn't pay, and he couldn't do anything. And I said, look, why don't we do this? You're down in Florida now. You're not working up here anymore. You got time on your hands. He says, oh, it's driving me nuts down here. I'm batty. I need something to do. Good. He's going to go and do a little bird dogging, find some deals down there for us now, and that's how we're going to solve this problem. He's going to make some money for us down there. He's got time. We don't necessarily have the time that he has, and he can't pay, so fine. Use what you have. We're going to put him to work down there to go find us deals down in Florida as well. And we'll get paid that way. Don't worry about the house up here. Your daughter takes her time, she takes her time. Fine. It's about solving the problem and not coming up with a solution, not so much dealing with the problem. And so that's part of what we did with him as well, because you don't know where people are going to be throughout the course of owning these assets. And you got to be, again, flexible and nimble in dealing with people as well. Maintain the portfolio. Next, what about disposition? How do you get rid of a particular asset? What's the best exit strategy? Especially when you're buying paper. Are we going to buy a loan just so we can sell it to somebody else? That's called wholesaling, flipping. To do that. Should we buy the loan and modify it to get payments again? Should we buy the loan and offer it to another investor who just needs an income stream? Get it to perform again? Should we buy the loan and offer them a discount in the payoff? We just did that in Georgia right now. We did it last month. We bought a loan. It actually was a second mortgage that we bought. The guy hadn't paid in 8 years. He thought he was free and clear, never going to hear from it again. And we sent them letters, trying to get in touch with him and doing all this stuff, and he wouldn't answer until we started foreclosing. Oh, wake up call. Call us up right away. Got an attorney. Call us up right away. What can we do about this? And I said, okay, well, he owed us, I don't know, like $150,000. And he wanted to pay us off like $90,000. I was like, okay, that more than doubled our money in 2 years. Let me think about this a second. Okay. So we kind of, you can never give him, we, negotiated a little bit, but he came a little over $90,000. He ended up paying us off. And I gave him a $60,000 discount on his payoff. And he was ecstatic. I got letters and emails from the attorneys complimenting us on how professional we were and how gracious we were and how generous we were in doing all this. I said, can we put that on the website? And
Got it.
So we gave him a discount because we bought it at such pennies on the dollar. We discounted his payoff and doubled our money on that particular deal. That's power. That's value. That's part of the stuff that we're doing. That's one of our exit strategies, one of our disposition strategies. What about liability? Ooh, the attorneys love that. Keep them in business. They love that. What kind of liability? I'm going to ask you another question. AJ, which dollar, not to put you on the spot or anything, but I'm going to put you on the spot. Which dollar has more value? The one I give you or the one you steal from me? Not that you're going to steal a dollar from me, but which has more value?
Which has more value? The one that you give me or the one that I steal? The one that I steal.
Why do you think it has more value?
Oh, that's not fair.
Why? Because everybody thought the same thing. So you're not the only one. Everybody thinks the same thing. I just have a take on you. I'm going to tell you you're wrong. Let's jump to the page. You're wrong. No. Why? Because the one you steal from me, I could sue you for, get my dollar back, and it ends up costing you $3
$3
to get it. And what did you net? Negative. -3. As opposed to the one I gave you. What's the difference between the dollars? One comes with liability, one doesn't. And to know the difference between the two is key. We're investors. That's how we make money, is by taking risk, right? So taking risk is not a bad thing. You have to understand how to mitigate that risk, how to take calculated risks, how to handle those risks. I'm okay with risk. Lou, you'll like this one. I didn't forget you, Lou. What about the tax issues that come along with buying notes? I hate this conversation with Lou. I don't understand any of this stuff. I just think you get the right guy that understands this stuff. He understands this stuff. Okay? What are the tax issues that come along? Now, we deal with a lot of people who have IRAs, self-directed IRAs. Ton of issues that come along with that. UBIT, Universal Business Income Tax, you have to worry about. Disqualified persons that you're dealing with. Self-dealing. There's a whole bunch of rules you have to worry about when you're dealing with self-directed IRAs as well. All right, and we talk about it all the time. What's worth this? What's value in more buys? It's always a basis. What'd you buy it for? That doesn't matter what I bought it for. It's really worth this. So there's a whole bunch of tax issues you have to worry about in this business as well. So we're dealing with all this. Why would anybody want to get in this business?
Because you do it for us.
Did you see this presentation? Why would anybody want to get in this business? It's a terrible business. No, it's a great business to be in because it's very empowering. It's very powerful, and you can have an impact on people's lives. Okay, and people are looking for this. The banks are not doing this. The government, the Fannie and Freddie, the GSEs, they're not doing any of this. They just want to. It's a numbers game to them. It's a numbers game to them. Everything is a number to them. And unfortunately, our world, especially in real estate, can't be translated through numbers. This is a relationship business. This is a relationship business. You have the relationship. These are just tools to work on a relationship that we all prosper from. It's all this is. It's not a numbers game. The numbers are just used for reporting. I actually heard someone say one that the more exact a number is when you're talking to somebody, the more full of shit they are. Economists especially. Whoa, we're going to go GDP. Yeah, in real estate, when we're doing a good deal, is that a good deal? How much did you make? Enough. That's it. That's how it works. We made enough.
You don't need a calculator.
You don't need a calculator. That's right. It's either it's there or it's not. How much? I have no idea, but we did well. Did you lose money? No. Did you make enough money? Well, I took my wife on a vacation. I think we did okay. That's how the numbers work. But if you're going to be so exact on a number, and believe me, I use this as a qualifying factor when I talk to people. Well, we grew 317%. You didn't. I know. There are so many factors that can't be factored in and numbered and qualified in a number. That's what this business is. And I gotta tell you, part of the reason why we don't go out and teach and give workbooks and all that stuff, because that's all down to a system. There is no system in this business. Every deal is its own child. Every deal is a red-headed stepchild. Every deal. It's got something different. Every deal does. There is no system to this. What you have is you can do these things to give you the ability to make better decisions and better judgment. Because this whole business is nothing more than a judgment call. Experience brings you to a better informed decision. Numbers can help you to get to a better informed decision. But all it is a judgment call. Because in the end, you can have all the numbers you want, and it can be right on, right on, right on, and all of a sudden, it goes upside down. Well, it's okay. You just got to know how to get out of it. It's okay. That's okay. But the good news is is that you don't have to do any of this. The good news is that we have opportunities for people like yourselves that don't want to get involved in all this, that you can park your money with us. Okay? The two things that we do. We do have a private equity fund, the Distressed Real Estate Mortgage Fund, one as we spoke about before, for accredited investors only. Come in and take equity with us. We are launching in the beginning of the year a new debt offering as well that's going to pay 10% for 10 years, up to $10 million. Now what does that mean? It doesn't really mean much to you guys there. I'm saying that because I'm trying to press Lou that I actually remembered what we said we were going to do. The numbers, right. The minimum investment on either side is $100,000. So if you, and this is where this goes to. The reason why we've done this, because different people have different appetites. People want to get involved in the business, some people don't want to get involved in the business. Some people this is for, some people this is not for. But those that do want to get involved in the business, it comes down to your own specific risk appetite. What are you looking for? And everybody's at a different place. It's all subjective. So we've created different offerings for different people depending on what it is that you want. If you want to take some risk and own some of these assets with us and park your money next to ours, then we have an ability for you to come into the fund that for as a accredited investor. If you don't want to take on the risk, take on some of the expenses, want to be more of a safer play, preserve some of your capital, and just get an income stream, then you go to debt. And you lend us the money, and we'll pay you 10% on your money on an annualized basis, and we'll just pay you a check every month. You don't have to worry about what we're doing with all this. Just know that we're putting it into good assets. We report to both of you. So it depends on what your appetite is, what your desire is, to whether it be preserve capital, whether it be to grow some more net worth. So everybody has a different calling of what it is they want to do and get involved in this business. And so we've created a couple of avenues for people.